Business now from Stephen. We're going to start, in fact, in the US. Two traders in the bank HSBC, they've been charged with fraud, haven't they?
Mark Johnson is the global head of foreign exchange trading at HSBC. Along with his former colleague Stuart Scott, he's been charged with using insider information to profit from a $3.5 billion currency transaction. The case is connected to a 3-year-long investigation of manipulation of the currency market globally. HSBC and its competitors have already paid more than $10 billion in civil penalties over the probe. Clement Bonnereau has more.
Mark Johnson was arrested by the FBI as he attempted to board a transatlantic flight in New York. The British national and head of HSBC's foreign exchange trading is accused of defrauding clients and manipulating the foreign exchange market to benefit himself and his bank. A former colleague and fellow British national, Stuart Scott, was also charged.
The charges and arrest announced today reflect our steadfast commitment to hold accountable corporate executives and licensed professionals who use their positions to fraudulently enrich themselves.
The two men allegedly benefited from a $3.5 billion currency deal back in 2011. A client company had asked HSBC to convert this sum into pound sterling. The US Department of Justice accuses the two employees of buying sterling in advance, knowing that such a transaction would push up the value of the pound. They then sold their sterling to HSBC, allegedly making a $3 million profit from the operation. They also billed their client $5 million in fees for their work. The case comes after 3 years of investigation by US authorities into rigging of the currency market globally. It is the first time individuals have been charged, but 6 banks, including HSBC, have been fined over such practices.
Now, the story we were talking about an hour ago, the European Central Bank is to give its take today. This is on the UK's vote to leave the EU, isn't it?
It's a new challenge for the ECB President Mario Draghi. The bank is already taking extraordinary measures to shore up the Eurozone economy, cutting rates to zero and buying €80 billion of debt a month. The ECB's Governing Council meeting today to discuss how to deal with the effects of Brexit. Earlier we spoke to Naeem Aslam, Chief Market Analyst with Think Markets, about what to expect from today's meeting.
If you cast your mind just what happened with the Bank of England meeting, we were expecting a rate cut. And then Mark Carney was very much driving that, that there's going to be a massive quantitative easing coming from that, but that didn't happen. So if the market is expecting any sort of a similar reaction today, perhaps there would be a surprise because European Central Bank would not do anything today. They still need to see a lot of data coming in. They wanted to see what are the consequences of that exact data. Because if you look at the ZEW, German ZEW data yesterday, it dropped.
This is business confidence in Germany.
Absolutely. That literally dropped off a cliff. So just showing that there's no consumer confidence coming up. Now, with respect to Bank of England, they are literally cherry-picking some of the numbers to reassure the market that, perhaps Brexit isn't really that much of a grave concern, even though it is, because the data hasn't really shown the exact consequences. And I think this is the reason that the European Central Bank perhaps will not do anything today with respect to their quantitative easing, but going in September, which is a very crucial meeting, we are expecting them to come up with another sort of a quantitative easing.
Well, let's take a look at how the markets are trading ahead of that decision. And we've got European shares opening generally up, just London inching towards the downside at the open. In London, the low-cost airline EasyJet, its revenues are down for the last quarter. They're blaming that on both strikes, currency volatility and the recent terror attacks. Their shares down almost 6% in London. Meanwhile, shares in Lufthansa, the German airline, are down over 8% after it cut its profits target. Now, over in Asia, reports from Japan of a potentially huge stimulus package giving investors something to cheer about. The Kyodo news agency saying the measures set to be announced by Prime Minister Shinzo Abe could be worth almost $200 billion. The Nikkei in Tokyo there up by almost 0.8%.
Finally, lovely story for you. You'll love the story, but you'll really love the video as well. It's the story of how a YouTube video has led to a $1 billion takeover. This.
It's all about a man called Michael Dubin. He introduced his company to the world in 2012 with this tongue-in-cheek video explaining why his razor blades, sold under the brand Dollar Shave Club, were better value than their competitors. Now, it was a version of this video that originally helped him to get funding for the company, which sells blades online as a subscription service. Now, he's grown from this slightly ridiculous video to 3.2 million customers, companies earning $200 million a year, and it's now been sold to consumer goods giant Unilever for $1 billion, Jobbing himself earning some $90 million from the deal. Not bad for a YouTube video.
Does the bear use the razors? That's what I
Well,
want to
not
know.
by the look of things.
No, exactly. It looks pretty hairy to me. All right, thank you, Stephen. Stephen with a very strange story and a very strange video as well.